Hey everyone, it's Jordan, and this video is being recorded on the early evening of Friday, October 30th, 2020. Hope you had a great week. In this video, I'm going to discuss the current sentiment as I see it in gold and silver. Thank you for tuning into this video, and before we get started, make sure you subscribe to my channel so you can see these videos immediately after they're posted. Okay, so let's begin with the gold COT, the commitment of traders, and at the top of this chart, we have a weekly candle chart of gold with a potential 200-day moving average equivalent there. And also below that, we have the net speculative position in gold as a percentage of open interest, and then we have open interest at the bottom. Quick thought on the price action. As you can see, there is significant support around 1800, just below it. In the upper 1700s, this is something I've been talking about in other videos. And if we look at the price action, the candles there, the top right, zooming in on the last couple months, still looks bearish to me, that the path of least resistance is going to continue to be lower. Now, turning to the COT, it's been kind of unconventional over the last 4, 5, 6 months or so because normally when the price goes up, we see the net speculative position rise as more speculators come in. They tend to chase strength or be trend traders, and that didn't really happen. When gold made its big breakout past, you could say 1800, or even a little bit before that, there was some commercial short covering. That has happened sometimes in the past. And so essentially what happens is the market gets really strong. It makes a really big run. And during that type of action, the commercials who typically buy weakness and sell strength, they realize they're going to lose a lot of money, and so they have to cover short positions. So that's some of what happened in the last couple quarters, and so after gold peaked, we've actually seen the net spec position in terms of open interest has risen a little bit. But I want to focus there on my annotations, and I'm showing the nominal position because as a percentage of open interest, you can see there at the bottom, open interest is relatively low compared to the beginning of the year. So because it's much lower, that kind of magnifies the percentage. So looking at it nominal terms, you look at this year, it's basically kind of ranged from roughly 245 to almost up to 300,000 contracts. As of 3 days ago, it was up to 296. I still would like to see some more progress in terms of speculators coming out of the market. If you actually look at the last couple months, there really hasn't been that much of a change. So the specs, there hasn't been a large amount of specs coming out of the market. Now, I think in the next report, again, this report doesn't cover the last 3 days, but I think in the next report, we're probably going to see that. We'll see that 296 figure go lower. And so we'll see what happens. Assuming gold trades down below 1800, I think you're going to see improvement in these indicators. But at least, and we can say the same thing for silver, at least we don't see these things at extremes as far as sentiment being too optimistic. So it's a little, it's a little different given that, and I think we saw the same thing in silver where we saw the commercials, as silver went vertical, the commercials had to cover their shorts. So it's a little bit different than it normally would look. But even with that said, it's good to see that the net spec positions are not at an extreme. I would just like to see lower prices in the metals, and therefore more speculators cut their positions, and then these indicators would look much better. I'm not saying they look bad right now. They're okay. They look fine, but I would like to see some more improvement on that. And if we look at silver, There's strong support, 20, 21. Looking at the candles there at the far right, top far right, still looks bearish to me. Now, looking at the COT, as a percentage, I mean, that's still, it's somewhat high, around 36, 37%. But this year, in terms of the nominal, it's ranged from 31,000 contracts to 100,000 contracts, which was the peak in February before COVID. And so now silver's up to 59,000. So that's not too extreme. But again, I mean, this is probably the third time I've said it. I would like to see more progress as far as if the metals go down some more, we see speculators cutting positions more. And I think we will see that. Now, I'm going to close with the DSIs, Daily Sentiment Index. This is really popular. Some people really swear by this. I think it's a good indicator. I just don't think it's like that great of an indicator as some other people think. I mean, it's just a indicator, in my opinion. Nothing too special about it. But, it is legitimate, so it's something we could watch. And shout out to Garrett Gogan on Twitter, who posted these. Thank you very much for that, Garrett. And in blue, it shows the 20-day moving average of the DSI. I prefer to look at the 20-day moving average. It also has like a raw data, which so every day it gives you a reading. That's way too volatile. I've seen that thing at 90%, and then the market just keeps moving higher and higher for a couple months. So I would look at the 20-day moving average of that. And what we see here is, it's come down to a pretty good level for gold. They're around 30%. If you go back, look at the beginning of this chart, 2008 to 2011, in a bull market, that basically, most of the time, 25, it didn't go below 25 to 30%. I mean, you can see that it did. It got down close to 10% from 2013 to 2018. So now it's down to 30%. It probably means we could be at a bottom, but not the bottom as far as this correction. And again, I look at price action, I look at sentiment. You have to look at everything and then weigh all the evidence together. And so, but that being said, this particular indicator is a good sign for gold because it has come down to a fairly low level. And that probably means, gold could possibly rally a little bit, maybe, for the next week or two, in my opinion. Silver, we see something similar. Again, it's in blue, the DSI. This is a 20-day moving average. That's come down to about 30%. So it's very similar to gold. I mean, it's encouraging that these indicators are fairly low, but I wouldn't take these indicators to mean that gold and silver are going to bottom immediately and they're going to start their next leg higher immediately and they're going to run to new highs in December, January. I really don't see that happening. What these indicators are telling me is, the market could be at a little, a short-term bottom, but by that I'm talking about maybe a couple weeks. I don't see this being like a bottom that's going to hold up for a couple months. But, I could be wrong. So with that being said, that's how I see it. Go to TheDailyGold.com. I have a lot of free stuff there. Check below in the description for info on some of that free stuff. Go to TheDailyGold.com. You can opt in there for my book. Thank you for listening to this video. I appreciate it. Make sure you subscribe to my channel and look forward to doing another update for you guys over the days and weeks ahead.